Hi, I'm Owen from Rask Australia. Thanks for tuning in to the Rask Network.
Before we get into today's show, there are a few things we have to go over.
Firstly, what you're about to hear and see is limited to general information only. It's not personal financial advice like you'd get from a financial planner. Also, it's important to remember that past performance is not indicative of future performance. That means that anything that's happened in the past, or we say today, is not necessarily going to reflect what happens in the future. Lastly, please consider that any of the guests or myself are featuring on this program may have a financial interest in some of the products or shares mentioned. That's enough from me. I hope you enjoyed today's program.
Good day. Welcome to the Australian Property Podcast. Thanks for joining us today. This is our weekly 2 cent segment. We're on a mission to become Australia's most trusted property podcast. I'm Pete Wargent and I'm here with Chris Bates. G'day, Chris. How's things?
Pete, life's good, mate. How are you? I think you're in Melbourne, right? Grand final weekend down there. Pretty chaotic, I'm sure.
Yes, absolutely pumping down in Melbourne. So we did an event together in Sydney last week. This week, we've been down in Victoria, did the Rask Roadshow out in Wangaratta. So shout out to the people who came out to that regional event. People actually came from all over the place, from Horsham, from Shepparton, Melbourne. So that was fantastic. And next week, we're doing the final event, the culmination of the Rask Roadshow in Sydney. A couple of hundred people coming along to that one. So if you haven't got your ticket yet, jump on there, just $50. And you're coming along to that one too, I think, Chris.
Yeah, Tuesday night. So if you're listening to this now, it's Sunday morning or maybe Sunday night, depending on when you're listening to it. But Tuesday night, absolutely. There'll be a whole team of us there. So can't wait to meet any listeners. What else has been happening, Pete? How are you finding things at work and the general market sentiment?
Yeah, so I've actually been catching up with a few of my property coaching clients down in Melbourne at the moment. So yes, it's been a tumultuous year or so in terms of mortgage rates. So people are just generally jostling to get better mortgages and mortgage rates, and also just reworking their strategy for the year ahead because the landscape has changed quite a lot. So I've just been doing quite a bit of that. And otherwise, kids are keeping me busy, Brisbane Lions fans. So it's absolutely rammed with people in Melbourne. So it's absolutely bustling here for public holiday, long weekend and all of that. And of course, by the time this goes to air, you'll know the results. So yeah, that's been keeping me busy. How about yourself?
Mate, just the same old rigmarole, trying to stay healthy with 2 young kids, and got 2 4-year-old birthday parties this weekend, going to a Blueies concert, going to a kite show, and we're having some friends around on the Monday long weekend. So
I'm jealous. You can't jealous get more of the Bluey.
Yeah, exactly. You can't get more family life than Bluey, kites, and 4-year-old birthday parties. So that's my weekend all planned.
Could be worse. I always had to get dragged along to the play school events. I'd probably prefer Bluey, to be honest, but it is what it is. So
it's a different festival. So I mean, lots happening at work as well. We're seeing a real, not like urgency there. Like it's definitely an appetite to make offers, and is still very strong. They're also struggling with still limited options as well. They're all trying to make properties work a little bit. Like, what are these compromises worth it at the current price? There's usually a lot of compromises out there. So what are the 3 stories we're going to talk about this week, Pete?
So firstly, CoreLogic put out a research piece, unit shortage looming over the Aussie housing market. The dwelling deficit out to 2027 is forecast to be 175,000 now by the NHFIC. So that's an upgrade. So we previously thought there would be a shortage, but it's actually worse than expected. So we'll take a look at where and why that's the case. Secondly, Melbourne house prices to jump 12% in 2025. That was an AFR piece, just quoting the latest forecast from KPMG. And they're generally quite bullish all around the trap. So particularly for the capital city. So we'll just run through those forecasts and what's happening and why. And then thirdly, a Victorian-themed story. Granny flats in Victoria will be allowed without planning permits by the sounds of it. An announcement by Dan Andrews. Also, there was a 7.5% tax announced, proposed anyway, for short-stay leases. But then Dan Andrews subsequently resigned. So it was possibly a little bit up in the air because this stuff isn't actually legislated yet. So yeah, lots happening in Victoria at the moment, aside from the AFL. So let's go through it, shall we? So firstly, the unit shortage looming or looming, I should say, over the Aussie housing market, CoreLogic reported. So, yeah, I guess in one sense, not really news that we'll have a shortage of dwellings given record population growth and dwelling approvals now decade lows. But the housing deficit projected out until 2027 has been upgraded quite dramatically. Previously, we were expecting around 100,000. Now the NHFIC is forecasting a housing deficit of 175,000 by 2027, particularly in places like Brisbane, Perth, Adelaide, some parts of Sydney and Melbourne. And about 60% of the deficit is expected to be in the unit market. So we've got essentially a vacuum in unit supply, Chris.
Yeah, I think this is going to be a real issue. We've already got ridiculous low vacancy rates, issues with homelessness. We've got issues with housing affordability. We've got not many investors entering because of borrowing capacity issues. And, Jarden also put out some research this week that showed the build costs, and how much they've gone up, which you've already spoken about in this podcast before, Pete. And, how does the developer make this stack up? You've got to so you've got to be able to sell it at a certain price point to make certain profit and a certain profit margin. And, a lot of developers are saying, I can't make this stack up. It's not worth the risk, and I haven't got the money to take the risk anyway. I mean, Tim Gurner came out, I read just a snapshot. I think he's got 30 pieces of land. I can't remember exactly, but maybe he's only working on 14 of them, right? 16 are just in land banked. And he does the high end, which is more likely to be the ones that are able to get the numbers to work because there's more money in that market and potentially ways to make a profit. So I think it's a real problem. I think if you developers can't build, even if there is, unless prices go up. And so how do people justify paying a lot more for something than current market prices? It's a real tricky one. And ultimately, there's just going to be very little supply coming on the market when we really need now more than ever. Hence why there's all these other policies like Dan Andrews is bringing in, because there is a rental affordability crisis, plus a housing affordability crisis, plus a homelessness crisis, all happening at the same time.
Yeah, so CoreLogic's analysis said with a median value of 637,000, that's the AFL siren going off on my iPad, giving us the latest team updates, around 30% cheaper than capital city houses. Capital city units offer a significantly more affordable entry point for first home buyers, as well as a lower maintenance option for both investors and downsizers. So with 175,000 dwelling deficit expected over the next 3 or 4 years, and about 60% of that in the unit market. So CoreLogic said that with the cash rate potentially easing in 2024, greater purchasing demand could fuel a stronger price boom in the unit market at this time due to the relatively low number of approved projects, and also a temporary vacuum in new unit supply. I think, these things are very cyclical, and there's a lot of debate among economists about whether developers should or would bring supply to the market. But generally, people just don't build unless prices are going up significantly, Chris. I think there's one little wrinkle here. The CoreLogic talking about the cash rate potentially easing in 2024. Just one thing that's really changed over the past 4 or 5 weeks, as people would have seen, and I've definitely seen driving up and down the coast at the Rask Roadshow, is the price of fuel has suddenly jumped back up. So that's just putting a little bit of pressure back onto central banks to keep half an eye on inflation and probably pushing out any potential rate cuts a bit further.
Yeah, and I think we just have to see how that plays out. Fuel price is pretty volatile, right? And so maybe that sticks around and it creates issues. But I think this whole unit supply shortfall it takes years and years to solve. Hence why, a lot of the announcement around like building 1.2 million homes, well, that's great, but is it actually going to happen? This is actually going to be another catalyst as well for the banks to have to relax their lending. So as soon as there's pressure on rates going back down, which maybe the fuel, slows that down, but there'll be a pressure on APRA to step in and increase borrowing capacities, because the only way the numbers stack up, the prices have to increase, or the prices are only going to increase if borrowing capacities go up, right? And if prices don't increase, developers can't make a profit. So there's a real, frozen part to the market that we need to start. And whether the government has to sit their hand there in their own pocket and start cutting taxes, I think that's another option they'll have to consider to get or giving incentives and subsidies to developers to start doing projects, or maybe they have to just start building key worker housing and social housing. Maybe they have to, I don't know. I just think there's going to be a big problem there. Or maybe they step in, like Chris Minns is basically property council this week, and basically saying, look, we're going to override the councils. We're going to just rezone land that makes a lot of sense for developers to build because the feasibility stacks up, and create that opportunity where the developer can make money just because that's going to create housing.
This is a really good point you just made. I think we saw with the home builder stimulus that you can actually build a house these days. Well, 3 or 4 months you can throw up a house, but actually to get medium density projects and apartments out of the ground, usually that's a 2 to 3 year process, which partly explains why the dwelling deficit is expected all the way out to 2027, especially for units, because even if a project is approved today, to actually go through the site clearance, site remediation, get all the designs through, get the construction up and running. You've got to make off the plan sales normally in Australia to actually get these things financed. Well, that process is really 3 years from start to finish, so even if we got a big uplift in prices and uplift in approvals, which doesn't seem to be happening just yet, well, even then, that would still push us out to 2027 before we get the next cycle of supply. I think you're right, though. There's definitely a push on at the state government level to try and get things happening again, and relaxing planning restrictions might be one of the things we see. Definitely some government intervention in terms of social housing or public housing. That could be another thing. Build to rent is another one. But yeah, as I say, it could be several years before we see the fruits of that coming through.
Yeah, and then we're also going to see low listings, I believe. Maybe you got some investors selling. Maybe there's a bit of turnover of listings coming right now because people may be over leveraged in that. CoreLogic also released a higher than normal increase in listings that are selling with under 3 years of ownership. That's a bit of a sign, but I don't think we're seeing this mass force selling, this arrears, and particularly even if we get a bit more confidence around rates, pausing or going down. So you're going to see low listings and low levels of build. So people who want to enter the market are going to be competing over a finite amount of properties. And unfortunately, that means that the people who've got the biggest borrowing capacities are going to dominate the market. And so the higher income couples and families are basically going to force out because A, they've got the borrowing capacity, and B, they've got the ability to stretch. And so you're going to see this, but find it really hard for parts of the market to enter over the next couple of years because prices are going to run on them, which is not the last thing they need. So, the tight supply, very new builds, and growing demand confidence around rates and borrowing capacities.
Yep, and that feeds into our second story. Melbourne house prices to jump 12% in 2025. This comes from a KPMG forecast. Now, why do consulting firms, accounting firms, and economists all release home prices forecasts? Well, you can debate why they do, but they do. It's something they have to do. And it goes back to something that Chris and Veronica talk about in their full or forecaster report, because they're not always accurate by any means. But anyway, KPMG says that for Melbourne houses and units, Sydney houses and units, but actually gains forecast for all of the capital cities out to 2025 due to rising demand, falling interest rates, and more foreign investment, which I think is a very valid point. We sort of saw the pathways for foreign capital were largely shut off for a couple of years, but seeing certainly in Sydney and Melbourne, there's a lot more international students around. And that tends to be one of the pathways for capital finding its way into the country. And KPMG forecasts Melbourne house prices in 2025 to rise 12%, Sydney up 10%. I think one of the things that stood out here, Chris, when we were running through this, Hobart is predicted to post a 14% increase over that time period, and Perth is set to rise 9%, Canberra 9%. I don't know if there's any reason for Hobart. They're right up one of the biggest performers, and yet at the moment it seems to be one of the weakest markets. I think that their theory was that on the supply side, just a housing shortage is expected to persist due to the pullback in construction activity. This was a Fin Review article I'm quoting here. So does that make sense to you? It sounds a bit bullish to me.
Yeah, I think on the listing side, Hobart's probably one of the the weaker markets in terms of growth, like increasing listings, and they're much higher than they were, the last few years. And so inventory and, the amount of properties on the market, how many months of supply really matters. And so if you've got a lot of more listings than people buying, then that's not great, right? Because you get as buyers have choice, they have less pressure to transact. What really drives prices is when inventory, the amount of months of stock on the market really reduces, because buyers go, well, there's not much on the market and it's turning over. And so they get agitated and they get more likely to want to buy, right? So there's that urgency there, and months tick over and they get buyer fatigue. And that's been one of the things that supported prices the most last year, is that, even though prices were falling and people were, rates were going up, stock didn't accumulate on the market anywhere near the levels of 2018, 2019. That was, a lot of people were forced to sell in that downturn, and there was a spiraling effect was happening, because people were like, oh, I've got to get out because prices keep falling. It was the credit crunch. There was no end in sight. And the market jumped back really strongly in 2019, even though there was a lot of stock on the market. And so coming into this sort of bit of bounce back, has been very little stock on the market. And so I guess my thinking there is Hobart's not showing the right signs. I think my overall take on this article, though, is not so much what was in the article. It was the headline, and the headline was the front page of the AFR. And so it's not just, doesn't matter it's KPMG, it doesn't really matter what it's saying. It's just saying it's getting space in the media right now that prices are going to start to rise. And that won't be the last one. You'll start to see more and more forecasts of quite significant growth in the next few years, and that will play into buyer sentiment, because they'll start to say, well, that's what everyone's saying. And that the herd starts to believe that, and the buyers will. So that's my take on it. You're going to start seeing these real positive, because 15, 20% growth is quite significant growth in these markets. It's not 3 or 4%. And I wonder if it's going to continue, Pete.
It's the vibe, as they would say in Victoria. Yes, and these are actually inflation-adjusted forecasts. So if Melbourne is to do 12% out to June 2025, well, in nominal terms, I guess we live in a nominal world, that's 15% growth or thereabouts. Sydney, 10% plus inflation. I don't know about Hobart doing 14%. But Canberra, 9%, Perth, 9%. So, yeah, as you say, who really knows? Because these forecasts often prove to be inaccurate. But as you say, if headlines are talking about ongoing price growth for the next 18, 21 months, that tends to have an impact, surprisingly. And, people read the front page of the paper and it's got that kind of vibe about it, then it does actually change sentiment on the ground a little bit. I think one of the points that KPMG made, high rental costs could also push renters to buy instead. Even there's a sort of post-pandemic demand for more space, I think, as people are still working from home. And in particular, demand from foreign investors is now starting to pick up again, and that's expected to continue over the next couple of years. So a combination of all those factors and potentially easing interest rates at some point, high population growth, the May budget forecasting, 400,000 growth this year and something similar next year. Look, it's big numbers. And as you say, it's starting to feed through into some slightly more positive or upbeat headlines.
Yeah, absolutely. So I think it's just going to be a watch this space and see if, we start to get more and more of these positive articles, and if that starts to really shift into sentiment, what's everyone believing. What's our sort of third story, Pete? Your mate, Dan Andrews, you were pretty vocal at the event last week that you...
Hey, Chatham House rules. What happens on tour stays on tour.
I'm sure that he wasn't your favourite person in the world out of 7 billion people. So he's obviously left. What's your take on what's happening down in the southern state?
Oh, look, full disclosure. So myself and my family were stuck overseas during the lockdown period. So we couldn't get back into the country for the best part of a year. So when some of the more draconian restrictions were in place, I was quietly grumbling while I was stuck in London. But it is what it is. So Dan Andrews last week made an announcement that second dwellings in Victoria under 60 square metres, at least from what could be interpreted from his Facebook post, won't require a planning permit. There's also a 7.5% tax on short stay leases. So that's intended to try and bring some more of that Airbnb type stock back into the long-term rental pool, which is, I think, a politically popular move. You do get the feeling with some of these policies, they kind of knee-jerk policy reactions to the dwelling shortage and not really tackling the problem at the source. I think it's not going to get more houses built or dwellings built, just discouraging investors. But the granny flat announcement is an interesting one. So, what would we see next? Potentially a boom or a mini boom in the building of granny flats, maybe some impact on the rental market. We don't know the actual terms of the policy yet. It did seem to imply from some of the small print there that there's an expectation that people would rent out the granny flats rather than just let family and friends stay. So that does have some capital gains tax implications that people would need to think about. So hopefully it could take some of the pressure off the rental market in Melbourne and Victoria, Chris.
Yeah, so we just did an episode with George Maurice. It won't be out yet, but he's a tax accountant. It's going to cover those issues around Airbnb, and hopefully you guys enjoy that episode when it comes out. Top guy,
George. Definitely tune in for that one. He knows his property tax inside out.
He does, and it was a good episode, if I can say so myself. But you're right. I think the attack on Airbnb is a bit of a short mindset. Excuse the pun there. But I think, 7.5% tax is quite hefty, right? You know, if you're making $50,000 a year, putting 5,000 of that, let's call it, or 4,000 of that into the government rather than to your pocket, do you just up your prices? Do people leave the Airbnb market altogether, which is what they're hoping? But then does that push the price of other Airbnbs up? I think it's better than date restrictions, like a 90. I think as a Byron are doing a 60-day restriction. Which is nothing, right? So 60 days you can have it on Airbnb. I think that's not a great move. That completely removes you from short-term letting. And so, but a 7.5% tax, if you have got something that's really profitable, at least you can do it all the year round. A lot of countries are doing 100-day caps or 180-day caps. And that's a bit silly because if you still rent it out for 180 days, what do you do for the other 180 days? Like, does that just be vacant? So that's not solving the issue. So I think the ability to rent it out all year round, if you can still make it profitable under the tax, it might be a good policy that works. But, I think probably, Dan Andrews uses Airbnb around the world. He's probably a hypocrite at heart. He probably likes the use of Airbnb, but then likes to penalise it when it's in his own state. But building the granny flats, that's a bit risky for me, I think. Just have this free-for-all in terms of building. And whether that's going to be great for the wake up of our suburbs and how people and the quality and things like that, I think that's a bit dangerous having too much relaxed planning controls. But I guess it's desperate times, desperate measures.
Yeah, so not requiring a planning permit is different to not requiring a building permit. So normally you'd require both to get a granny flat up and running. I guess reading between the lines, most likely you'll still require the building permit, which is the equivalent in New South Wales would be a complying development certificate. So I think, from my understanding anyway, and look, this is a Facebook post, it's not draft legislation just yet. So you'd still need approval, just not the full council town planning type applications. But I was just driving around country Victoria last couple of days and chatting to a few of the people. So there's some absolutely gigantic solar farms out there, and I was chatting to a few of the locals in Wangaratta and hearing that quite often people with the workers and contractors, they're staying in some of this short stay accommodation, and often multiple people to a room, paying a couple of $100 a week each. And yes, for sure, the rental returns on that kind of property would be great. But I think people just need to be really cognizant of the risks, things like insurance. If you've got substandard dwellings or you're not properly covered, no amount of rental income is worth that kind of risk. Look, in terms of the market, the cities could get a bit busier potentially. Even more pressure on the cost of building and materials. And does it lower the living standards if you've got granny flats popping up all over the place? Possibly. But as you said, it's desperate times and desperate measures at the moment, and just looking at all kinds of measures to try and free up the rental market.
Yeah, you got to say, counter-intuitive sort of implications, right? So they're trying to put this tax on people who have got properties that they rent out full-time. But I don't know if the legislation says if you rent it out part-time, you rent out half your house or you rent it when you're on holidays, whether that you still have to pay the 7.5% tax. If you do, then are you going to more likely put your property into the rental pool, the short-term rental pool, when you go on holidays? No, because you got to pay this tax now. So it's another disincentive, which could be the providing some some real key worker, people who are between rentals, like that property could be available. So if anything, it's going to create more vacancy in people who are partially renting their place out at certain times during the year, which is another thing that relieves pressure in the rental affordability crisis. So you just got to be careful with these policies that, they sound great at first, but then what are all the unintended consequences that happen down the line? And obviously, they probably aren't thinking about these things. They're just trying to win some votes and show we're doing something now for it. We're taxing Airbnbs, which is an easy one to target.
One of the things with the political cycle, of course, is that the politicians aren't necessarily around for all that long to see the output of policy. I mean, Andrews is been one of the longest serving state premiers, but quite often it's not a long-term thing. Now, one of the things he said in his Facebook post, an extra or second dwelling less than 60 square meters not requiring a permit would mean extra space as your family grows, or somewhere to stay when the kids come to visit for the weekend. So he's thinking not so much of the rental market per se there, but actually potentially people being able to expand their family without having to move at a time when supply is quite short. So potentially, at least on that side of things, it might be a good thing for some families if it saves them having to pay stamp duty and all the selling costs of moving on to another place.
Yeah, I think it's just highlighted to me, though, that this is becoming extremely political at the moment. And the state governments, the federal government, I think budgets, housing affordability, the rental crisis is going to be one of the number one issues, right, going into this next election. And I think anything's on the table right now, things that wouldn't usually happen in a much more balanced market. There's going to be things, whether it's pro-development, whether it's attacking on Airbnb, whether it's, opening up to foreign investment, to, stimulate supply. Like there's going to be, I think, lots of change to planning controls. So I think there's lots on the table right now. And it's a real push behind the YIMBY movement. That's getting a lot of noise, and Committee of Sydney and et cetera. So watch this space. A lot's going to change, but a lot of it's going to be not short-term solutions. They're going to be longer-term sort of political promises, I believe.
Indeed. There's a common thread really running through all three news stories this week. So firstly, the unit shortage looming over the Aussie housing market. Secondly, and related to that, house prices and unit prices to jump all the way through to June 2025. And then thirdly, a couple of new policies for Victoria, granny flats to be announced or to be built more quickly with less planning or fewer planning restrictions in the way, and also a tax on short stay rental income. So I guess the common theme really, and you can see this just traveling around the country as I have been last few weeks, there's a lot of people here now. They can see the return in international students has been massive. The rental market's very tight. We haven't got enough housing. Actually, a lot of pressure. Just noticing just on everything really, infrastructure, even in hospitality, getting busy again. The music scene's pumping again. I've been chatting to some people this week. So yeah, a common theme really, lots of people and not enough housing. And I guess that's going to be something that goes on for the next, out to 2027, looking at the forecast.
Yeah, and I guess it's lots to cover this week and lots going to come out next week, Pete. So if you aren't coming on Tuesday night and you're living in Sydney, we'd absolutely love you to be part of the conversation. Anything else we need to wrap up today, Pete?
I don't think so. It's time for me to get down to the footy festival here, and the kids want to get some names stamped on the back of their shirts or Guernseys, as they would say in Victoria. And just there's a beautiful weekend in Victoria. So it's absolutely party atmosphere down here. So looking forward to getting back into it. You can catch me on Pete Wargent Blogspot, which is my daily blog, or you can catch me on Twitter at Pete Wargent if you're interested in property coaching, or we do also buy properties in Brisbane. And Chris, if people want to give you a shout,
jump out the link in the show notes. If you're not a first-time listener, you've probably heard that 1,000 times now. We'd absolutely love to help. Happy Sunday, everyone, and we'll have a good chat next week.
Yeah, we'll do a Q&A next week as well. So send in your questions. We haven't done one for a little while. So anything you want us to cover, just drop us a line and we'll be delighted to cover it. Enjoy the rest of the weekend, Chris. Chat soon.
Thanks, Pete.